What's up, guys? I'm back in the saddle. It's been a little over a week. I took a much needed break from market, the computer screen, everything like that. Just some fresh air, country roads. We did the drive. So it was like from Austin, Texas. It was like, well, first night it was 12 hours to Albuquerque. We ended up not being able to stay there because of some COVID restriction BS. So we had to drive 6 more hours, got the Flagstaff. So that day was super long. It was like an 18-hour day. And then the next day we drove another, I think it was another 5 hours to Zion. And then we stayed in a little town right outside of Zion. Then we did Bryce, and then we went to Moab, Utah. We did Arches, we did Canyonlands, and then wrapped back around southern Utah and finished off at the Grand Canyon. It was nice, though. It was awesome. It was a perfect mini vacation just to kind of take your mind off the screens and everything for a little bit. But I'm finally back. I've made the drive back today, and I'm ready to get going, guys. I'm ready to get back in the videos and get the game plans all set. I'm ready. I'm super pumped for this week's Q&A. I'm ready to engage and talk to you guys. I know Josh killed it last week. He did a really good job taking care of the page and taking care of a lot of the trades and stuff. So thank you, Josh. You did a tremendous job last week. But let's hop into it, guys. I got a lot to talk about tonight. I want to squeeze it in a pretty short amount of time because I want to get to bed because I'm beat. It was a long day. Oh, I need to get rid of that. That's bright. Okay, so first things first. Let's talk about the broad market. We got the SPY, and we're not going to overcomplicate this. We pretty much, I mean, we were talking about this for the longest time. The super bullish but unsustainable run up. And now we've had the multi-day pullback. We're on week 2 of the pullback, and now we've kind of established a channel. And what do we look for now? Simple. We look for a break, either an upside break or a downside break. The upside break is right around 343, and the downside break is right around 331. That's it, guys. That's all there is to it at this point. This is how I'm playing it. So over the next several sessions, I'm either looking for the upside break or the breakdown. My bias is I'm leaning toward this ending up breaking to the upside, but again, I'm going to let price action kind of be the determining factor behind that because when it comes to trading, you can't have a bias because as soon as you have a bias, that implies that you're trading with emotions, and that's not how we trade. So I'm waiting for the price action to determine which way we break, but for right now, I'm leaning toward the upside. It seems the general pattern that we have in place is very similar to what we had there and pretty similar to what we had here, where we had super bullish run up, big extension off of the 50-day moving average, and then a pullback. And a sharp pullbacks are always sharp. The velocity behind pullbacks is always going to be, you've heard the saying, pardon me, you stair step up and take an elevator down. And that's exactly what we saw here. It took us 3 days to wash out 2 weeks worth of gains. And now we're finally chopping. We found a channel. And now we're just waiting for that upside break. And there are a lot of individual names that keep me leaning toward bullish. And I'll show those names in a second. But yeah, 343 on SPY, that's the level to look for the upside break. And 330, let's call it 330 for the downside break. We would go over levels to look for if we break, but the first level to look for if we broke to the downside would be right around this 320 mark. And then if we break through 343, I think we would retest all-time highs within a couple weeks. So again, not a forecast, it's just kind of what I see. That's what the levels are showing me. I don't overcomplicate this kind of stuff. So let's let the price action determine it. But for the time being, these are the two levels to watch. And I'll keep this saved for now. One of my favorite big board stocks currently is Apple. It's had a pretty good pull, 20% from the high. So close to 140. I think it was like 138, pulled back all the way to 110. So a 20% pullback. That's a sharp pullback in a relative short amount of time. Very good, very healthy. I've been talking about that time after time about these parabolic run-ups. You need digestion. You need to breathe. It can't just be buy. It's not sustainable. And so finally, we're getting these pullbacks in a lot of these names. So what do? I go through my watch lists and I try to find which names had the most bullish run-ups. So Apple, huge run-up this year, super strong name, industry leader, et cetera, et cetera. I look for those stocks, I look for those charts, and I see which ones have that potential for a near-term upside move. And Apple, for me, falls into that category. So where are our levels? Again, don't overcomplicate it. 110 would be the downside break. Below that, there's a real shot it could go for this gap fill. And then above, I mean, I could even go backwards, but the main level would be 120. Over 120, I think it would speed back up to 130 relatively quick. Below 110, I think it would get toward this gap fill range. But the break that I'm leaning toward would be the 120 break, just based off of I mean, call it my bias, call it whatever you want. It's just what I see in the chart data right now. I'm leaning toward upside moves coming short to medium term. I think this was a really, really solid, healthy washout across the board. And I think for the most part, we're reset, a little more digestion. But for the most part, these names are reset to go and kind of retest and break all-time highs. So this is what I'm looking for, generally speaking, on Apple. And again, I'm a trader. What do? I don't have bias. I don't have emotions attached with my theses. I'm making these kinds of, I'm analyzing the data and I'm interpreting it in a way, and I'm coming up with a game plan, but I have my upside levels and I have my downside levels. So I know which ways I'm looking, which breaks I'm looking for, and I'm going to trade either way. But Apple, I think over 120, it could speed up toward 130. Below 110, I think it speeds down toward that 100, potentially into that gap. So and again, something like this, I would probably be playing like $5 to $10 in the money, get something closer toward that intrinsic value so I'm more comfortable, and then just kind of swing it for a couple days. The big stocks I want to talk about, DAL, UAL, and RCL, a couple of the airline stocks and the cruise line stocks. I've gone over it a million times already. There's no need to keep shoving it down your guys' throats, but I'm going to talk about it one last time. And from here, it is what it is, because I can only talk about it so many times. Because at the end of the day, it's going to happen sooner than later, whatever the move is. I don't see these digesting too much longer without either an upside break or a breakdown. So I'm trying to really time these right. UAL, I've taken on my personal account. I've taken just over the last week or so. I probably took maybe a $5,000 loss total over the last week, just kind of scaling in. And I'm not tripping about that. That's no big deal. I'm not worried about that. because the $5,000 loss, the $5,000 or so loss that I've had over the last week, it's just me preparing. I'm just getting the skin in the game. I'm revving up the engines and I'm getting ready to attack it, because when we break these previous highs, so I'll just show it here on UAL. So it's about $40 on UAL, and then on DAL, it's right where we are, guys, right at 33. So 33 on Delta, and then on United, it's closer to 40. But those levels are huge, and over those levels, we speed up to UAL, we speed up to mid 40s. On DAL, we speed up to upper 30s. They're just a very important inflection point breaks. They're not breakouts, but they are important inflection breaks. And I'm going to pound them, but I'm being patient. And that's why $5,000 might sound like it's a lot that I've taken over the last week, but it's really not, because it's all very calculated. It's well within my risk parameters, and it's me really just getting skin in the game, taking skin in the game out. It's more or less me getting ready to time it, and that's my strategy. That's how I trade, especially with these potential swing plays. I scale in and I take a little bit of a loss up until they're ready, and then I have the skin in the game. I'm prepared. And then I add to that position, and then I add to that position maybe one or two more times. And that's what I've been doing with UAL and DAL. That's why I've had a loss over the last week or so. But mentally, I'm super clear. There's no clouded judgment or anything. I'm ready to rock, baby. I'm ready to rock these things, but I'm very patient with them. So just keep that in mind. When I say I take these losses, it's all well within my risk parameters. And I think that's a very important thing to understand. And then RCL, same thing, coming up on a big spot on the chart. We have to go back a year on this one. But right here, that previous high, right around 75 over that. And this, I mean, there's just a ton of room. Ooh, whoops, I keep clicking the wrong thing. Ton of room. I mean, the first level would be up into the mid 80s, and then over the mid 80s, RCL just has a ridiculous amount of room. I wish I had the mental fortitude to just have an account with a larger amount of money and just swing like common stock, because I'm fairly confident that this is going to be a $100 stock probably by the end of the year, would be my prediction. Within like 5 to 7 months, this will be back to $100. And I think there at some point it'll have another few big days like it had down here. But for the most part, you see it's very stair-steppy. So it's kind of hard to trade in that sense. You have to really hit it right. But if you can swing something like this for 5 to 10 days, you might be able to hit a big move on it. I've had trouble swinging this one in particular, RCL. Like, I don't know if you guys remember me talking about it several weeks back, that 60 break, but I was right on the money, but it just took way too long, and it became kind of boring. But regardless, it's close to that big level. I'm still paying attention to it, and I'm still looking to make a trade on it. But it's definitely a harder stock, at least personally, for me to swing. But nonetheless, the levels are the levels, and they apply the same way to UAL. I think UAL and DAL will be easier to make a good trade on. So that's why I keep kind of pounding the table on these two names in particular. Moving forward, let's bang these out, guys. GLD, I posted about it today. It's approaching a pretty big inflection point here on the chart, right around 185. And then over 185, you got to think this could speed back up toward 190. And then at that point, it's really just all about carving out the pattern. I mean, it's a very defined pattern. Big run up, and now this kind of what do you call it? Like the flag. I'm not good with those names. A pennant, flag, whatever the gurus call it. But here, I'll keep that, because it really, I mean, technically speaking, it's this pattern here. I don't know. Does that look good? I don't know. I don't know the technical names for these things, but the way I call it, it's a flex pattern. It's a flex pattern. It's coiling, it's getting tight. You see it compressing. So we had that big move. And then look, we've now compressed. We're getting tighter. We're coiling. So at some point within the next several weeks or so, I don't know exactly. All I know is that at some point soon, this is going to either have a big upside break or a big downside break. And just based on the market environment, I guess, I'm leaning toward upside break. That's where my positions are. I'm in calls, but it's a sexy, sexy chart. And if I take this and I zoom out, I wanted to show you guys the weekly perspective going back. Let's go back like 15 years. This is such a sick weekly chart. So I talk about this pattern all the time. Huge run up, and then your in this case, multi-year consolidation. And now we're back retesting those highs. So here's highs, and now here we are retesting highs. The weekly setup is just gorgeous. It's textbook. It's a thing of beauty. So going back to the daily chart, then I just look at this and I've seen this pattern in gold like over the last year. I mean, we saw this pattern multiple times already. Let's just highlight a couple of them. Here's one of them. Where was another one? Oh, here was one of them. And I thought there was one more distinct one. I mean, I guess you could have called this right here, right? And then it broke, but that was kind of a weak example. The two stronger examples highlighted. But yeah, I mean, just textbook, guys. These are just textbook looks, textbook bullish breakout looks. And we've got it going yet again. So GLD, I'm currently eyeing the my personal and on the joint, I have the 180 calls for the end of this week, and then I have 170. I have 170 170s for October, the October monthlies. I only have those on my personal. I don't have the 170s on the joint account, but my plan is to build a position to be able to kind of swing this, because I could see gold at like 200 before the end of the year. So I want to have a decent swing going for it over the next month or so, because this is a really, really, really good chart. So let's keep moving it forward. WKHS, kind of same thing. The $20 contracts. I think this could blow off into the 30s at this point, but I'm just using each previous day's low as kind of my stop out, or I'm sorry, each previous day's high as kind of my stop out point. So like going into tomorrow, my stop will be like 26-ish, 25.5, 26-ish. So like this morning, I did get stopped out. I sold for a loss, and then it came back up and I made a little bit of money on it. And that's just kind of how I'm going forward with it. So tomorrow, 25.5, 26 would be my stop, and have a position and see how high I can get it. But really just respect the stop at this point. It's a brilliant move. Yes, it can blow off into the 30s. No, the move's probably not done, but at the same time, we've had such a massive run up. You have to protect your gains, so be smart. And then NIO, super tight. It's getting that similar look that we had last week, just on a shorter time, or not last week, the couple weeks prior. A similar look, but just a kind of shorter time frame. So the big break to look for here would be $20, and over 20, I would think that it could do a quick move to $22 to $23. So I would be eyeing something $1 or $2 in the money, closer to that intrinsic value. And if it's $1 or $2 in the money, it's probably trading around $2 or so. So translate that to common stock. If the common stock moved $2 to $3 and you bought a contract for $2 to $3, if you do the math, that's like 100% or so, depending on what I end up choosing. But like right now, closed at 1873. I would probably be looking at like the $16 calls or the $15 calls, something, something like that. Something a little bit in the money, closer to intrinsic value, makes it easier for me to gauge. And then Beyond Meat, I love the look of this daily chart. I'm bringing it back to the big picture, but it's such a clean look to the chart. I don't know if the sector is super special, anything super special right now, but it's a clean look over the previous high of 150. I think it was about 150 from last week. I think that could speed back up toward 170. So over 150, I would be playing probably like the 140 calls and just look small scales here and there and try to swing that toward 160, 170. But it's a clean look to the chart. I'll have more of a fine-tuned game plan if and when I enter the trade, but super clean setup to BYND. And then this last one, Josh loves KCAC. It's one of those SPAC plays. I think it's like lithium batteries or something like that. I don't know much. I don't know anything about it really. I just know it's a SPAC play. The volume's super good last week and it's died off. And it's just one of those charts where we look for this kind of pattern. The same thing that I talk about time after time. I just want to see this consolidate and build a little base and then go for an inflection point. And then that's when we would really size into the trade. But for now, there's really, in my personal opinion, Josh loves this one. In my personal opinion, there's not much really going for it at this time, but that doesn't mean that it can't make shape. And that's kind of why I have it on watch. It's on permanent watch just because I'm looking for it to make a shape. I'm looking for it to make a shape and then break a inflection point, and that's when I would attack it. But I know it's a strong name, it's in a strong sector, so it's one of those things where you got to keep it on watch, and that's what I'm doing. I think that just about covers everything. I think we got a solid game plan going into tomorrow. I'm going to stop sharing screen. I'm going to close that. Yeah, so tomorrow the big one I think still is just watching this SPY to bottom out and break that key level that I talked about, that 343, because my gut says that we can speed back up to 350 pretty quickly. And it would take a lot of the stocks that I mentioned, like DAL and UAL and Apple, they are in positions to head back to their previous highs. And that's the trades. Those are the trades that I'm looking to make. But again, when we enter these positions, I'm going to try whatever. Obviously, every day, whenever we enter or exit the positions, we're always going to notify you via Twitter. But yeah, I'm excited. I think we're gonna have a strong week. It's only Monday. I have a feeling the rest of the week's gonna be a good one. So just stay on your toe, be nimble, guys. Don't put yourself in a position where you have way too many shares or way too many contracts, way too big of a position size, and you get uncomfortable. That's the last thing you want to do. That's why we emphasize scaling in and scaling out. Be comfortable. That's tonight's theme, be comfortable. So be comfortable tomorrow. I know Josh and I will be. So that wraps it up, guys. I'm gonna upload this shortly. It'll probably be up in like 30 minutes. So it'll probably, oh wait, this isn't even live. I don't know why I'm telling you guys, you don't care. All right. I hope everybody has a great evening. I will talk to you guys tomorrow. Flex out. Peace.